Morning, gang. Happy Saturday morning. Thank God it's Saturday. I can actually get out and do something with my hands, maybe outside of nice day out. So I kind of wanted to talk a little bit about finances today and where things are going, at least what's kind of going on. I've been waiting to do this video. Options expiration was last night, and so I kind of wanted to see how the market reacted. But we'll see what happens. I mean, who knows? Maybe I get slapped on the hand or something. I mean, if anybody saw, Florida had a conference of PhDs, doctors from Stanford, Oxford, Harvard, talking about COVID. And, this was all down in Florida, I guess. But, all these disease experts, PhDs, out of obviously prestigious schools. They got taken down by YouTube for medical misinformation because, PhDs in virology don't know anything about this. But, that's their deal. So, okay. So I'll talk about what I know because I'm not a PhD in virology, that's for sure. But I will talk about finance. So yesterday was options expiration. And I kind of expected the market to sell off, and I was very surprised at the end of the day when the Dow hit 34.2. We're hitting highs again, and struck me as very odd that the euphoria in the market just keeps going and going and going as we keep seeing more, inflation, which is not good for the market, as we keep seeing shortages, which is not good for the market. As we see, basically anything war is not good for the market, because the market likes stability. And with everything that's going on in Russia, Ukraine, China, Taiwan, Iran, Israel, whatever it is, that's not stability. Okay. So why is the market going up is still the question. So, again, I keep an eye on this sort of stuff. Now, I want to give you this one. This will floor you. If y'all remember when COVID hit last February, March 2020 or whatever, and the market took a bath, okay? And all I know is I just kept putting money in my 401k plan and bought a whole bunch of stuff cheap, okay? Since last March, so basically a year and a month, 12 to 13 months, the market is up 76% from the bottom where it closed today. Now, that's the third largest 1 month jump, or I'm sorry, the third largest jump in 100 years in the market. Not 1 month, 1 year. Okay. That's crazy. All right. And I go back to my days as a broker, and that was during the .com area, late 90s, what was I, 96 to 2003 was when I was on Wall Street. And of course, you remember everything. And like I've said before, I had my wins and losses. I mean, I told people stay out of pets.com because, all they do is sell dog food online. And that was a good idea. Then, of course, I told people, why the hell would you want to buy Amazon? All they do is sell books. Who the hell buys books anymore? Okay. Now, that one was obviously not a good idea. But, I've never said I've got all the answers. Don't. Okay. But what I do remember from back then was people shoving money into the market. They didn't care. Okay. It was, go take out a second mortgage on the house and put money in the market because you're going to make money. People take money from anywhere and buy anything. If it said .com at the end of it, people wanted to buy it because in the late 90s, if you were around then, paying attention to the market, you got in at the early days of an IPO and, the IPO may have gone off at $14 and at the end of the day, it was $75. Okay. And you're going, oh, cool. Look at all this money I made in a day. I mean, I remember for those years trading Cisco's, technology company, Cisco Networking, okay? And 3 times in a summer, I'd buy it for clients at 35, we'd sell it at 70, watch it fall back to 35, buy it again, went back to 70, sold it, back to 35, bought it again, and rode it back to 70. 3 times in one summer, we doubled money. Do that over and over and over again. 100 turns into 2, 200 turns into 4, and 400 turns into 8. There's an 800% return on your money doing that. People were thrilled. It's the same kind of euphoria you're seeing in the market now. People are getting their stimmy checks. People are getting their unemployment checks. They don't have to do anything, blah, 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 blah. And money's pouring into the market like crazy. This also has to do with the Robin Hoods of the world, the Schwabs, the E-Trades, the whatever, that there's no commission trading anymore. Commissions, at least back in the day when I was a broker, used to be something that investors worried about because commissions weren't cheap. You go in, you wanted to buy $10,000 worth of stock. It cost you $300. It'd be half a point in the stock move or something thereabouts, just to break even from the cost of the trade. Now it's not. So now if somebody wants to buy $10,000 worth of stock, if the stock goes up a penny, they've made money right there. Not that that's not a good thing. I'm not saying, hey, we should go back to commission trading. I mean, I don't believe that. But this is where you get into the same thought of, gee, the market just keeps going up and people just pump money and pump money and pump money. And I mean, we all remember the story from last month about GameStop and, a company that's basically worthless was all of a sudden, $300, $400 a share or whatever it was because of what's going on. That's not real, guys. Okay. Don't fall into this trap. And I know everybody's going to say, oh, you said the market was going to go down. Okay, I don't have a crystal ball, all right? I wish I did. If I did, I'd be a billionaire, and, that would be it. Bill Gates would be answering to me. I wish I had. I wish I could do something like that, but it's not realistic. I'm looking at a risk-reward type scenario, okay? I saw the market when the Dow was around 30,000. I thought we were topping out. Okay, I've missed about 12%. Okay, I mean, that's great. What I didn't do was I didn't take the risk because I'm still a firm believer that we see the market go back down to about 16. Okay, from here, that's a 50% haircut. Now, if I'm right, great. I saved all that money. If I'm wrong, I'm going to lose on the upside. Okay, it's not like I'm not doing anything else. I've mentioned to everybody about buying silver. I told you guys where I was buying it, that 24, 25 range, okay? Now, silver hasn't gone up 15% since I got out, or since I started buying into the silver market, but silver is now $26. It was down 24, 25 a little bit. So, okay, we got, a 5% move in silver. I still think silver is a good place to buy if you pick your prices. You're still going to get it down in the right around $25. It's going to bounce around. If you look at a chart on silver, you'll see silver stayed at about $24, $25 for a good part of a month, jumped up here just in the last couple of days to 26 and is now bouncing there. You'll probably see a little bit of a pullback. All right. So that's still what I think. But again, I'm not giving you guys financial advice. I'm just telling you what I see. Okay. Now, the one thing that maybe y'all do know, you don't know, whatever it is, insider trading. We've all heard of it. Okay, Martha Stewart went to jail for insider trading. Congress can legally insider trade. I mean, that tells you how screwed up Congress is. Okay, that we saw the stories here this past week. Nancy Pelosi's husband was buying call options on Microsoft left and right. And Tesla and everything like that, just before Congress goes, here's a big contract for you. And of course, the stock goes up and they make millions of dollars. Congress can legally do that. You and I can't, okay? Insider information is illegal to trade on. Go ask Martha Stewart. Okay? Not that she's one of my favorite people at all anyway, but, hey, did she spend time in jail? It's fine by me. But what you can watch is how the executives in a company trade their stock, okay? Because as we all know, a lot of their compensation is based on stock options they are given in the stock, restricted stock, whatever it would be. And there are guidelines that they have to follow when they can buy, when they can sell, whatever. Most employees, if you're an employee of a publicly traded company, you're told by your company you can't buy stock in the company you work for. I mean, unless it's through your 401k or some pension plan or something like that, maybe, but you're not allowed to because you have insider information. Okay, so that's y'all have to sign documents with HR. If you don't know that you did it and you work for a publicly traded company, yeah, you sign docs with HR sometimes saying that you're not going to trade in your company's stock. But what I'm getting to is this: if you watch what the executives are doing, now think about it. If you know your company is going to do well, you're going to be buying more stock for the company, however it would be. Okay, if you got restricted stock, you're going to buy it. Why do you buy stock? There's only one reason you ever buy stock. That's because you think it's going to go up. Nobody's ever gone, hey, I want to lose money. Let's buy it because it's going down. Okay. There are many reasons to sell a stock. Okay. You think it's going down. You're buying a new house. You just went through a divorce and the wife got half of everything, whatever it would be. Okay. There's many reasons to sell, but there's only one reason to buy. Here's the big catch. If you look at what is going on with the companies where the executives are reporting stock transactions right now, their attitude toward buying into the market right now is about this. None of them are looking at buying into, the companies don't want to be buying into the stock. The executives don't want to be buying into, they all see exactly the same thing I'm telling you, is there's a downslide coming. And it's going to look just like it did in the early 2000s. It's going to look like it did in 2007, 2008, where sellers, it just stair step down, 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 down. Okay. Or think about, for those of you who haven't been following markets for 20 plus years, think about what happened last spring. You turn on the news and the Dow's down 800 points. The next day, the Dow's down 1,200 points. The next day, the Dow's down 1,500 points. And you're going chunk, 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 chunk. All that is more people selling. And the same stuff is coming, okay? We're in a bubble, just like we were, the dot-com bubble that we had in 2000, the housing bubble that we had in 2007, 2008. I don't know what the hell they're going to call this one. Call it the COVID bubble, call it the stimulus bubble, call it whatever you want. But I'm saying, guys, risk reward here. If you're willing to risk losing a lot of what you've made here in the last year, stay, okay? If you're going, you know what? Maybe I need to take some of this back and park it somewhere so I can protect some of my gains, that's probably a good idea, all right? As the old saying on Wall Street always went, pigs got fat and hogs got slaughtered, okay? Because the hog was there's always that one more, it could always go up one more point. Now, wham, they got slammed, okay? If you got fat, start protecting some of that, okay? Just like if you're sitting on a blackjack table. You don't just keep I put $5 down, I won, I got $10. I put $10, won, I won. You don't just keep rolling it up. You take a chip away, you start putting it off to the side, okay? And you start banking something on the side that you're not going to touch anymore. Exact same thing here. So I just kind of wanted to tell you what's going on. But again, remember, the one thing the market hates is uncertainty. And if you can tell me that we've got certainty going on in the world right now, all it takes is one little thing to snap. Look what happened with COVID. This came out and boom, the market just went tank, okay? Let something happen overseas, okay? Let Yellowstone go off, do whatever. Let, the Derek Chauvin verdict is next week. Let something like that happen. Let you have riots all across cities, all across the country, and businesses burn, okay? Gee, insurance payouts? Insurance companies pay out. That means they lose money, okay? That's what I'm just trying to tell you guys. Not trying to tell you what to do. I'm just trying to tell you, be careful, make up your own decisions. But if you've got some nice fat profits on the side, remember historically a good return in a market is about 7% a year, okay? If you've made a hell of a lot more than that, maybe time to take some of that and put it in your pocket, okay? Do something else with it. Preserve your wealth. That's what I'm going to give you for a Saturday morning, guys. Hopefully it's going to be nice weather where you are. You can get out in the garden. You can go play with the dog. You can do something. But I just wanted to start there, and I'm going to try to have some fun today. So have a good one, guys. Pinball out.